Good afternoon, all of you. Just a second, and I will start the recording. Then we will start. Okay. Good afternoon, all of you. On behalf of the Professional Development Committee and the Task Force of Women Empowerment of the Western India Regional Council, the Institute of Cost Accountants of India, I welcome all of you for the special webinar series of Navratri, Shakti of Knowledge, Power of Transformation, CMAs Leading in the New Era. Today is the seventh day of a Navratri. Our today's speaker, CMA Ritu Choudhury, Madam, and our topic is Overview of Income Tax Act 2025. I welcome Madam. Ritu ma'am, Ritu ma'am have over more than 28 years of valuable experience working on finance accounts and tax from IDBI and Reliance Industries. Prior to joining as a partner in Ritu Ranganayaki and Company, joined IDBI a management trainee in year 2001 and associate with corporate accounts, audit and tax and handled tax issues arising out of merge with IDBI Bank and later United Western Bank. Work as a DGM MSME center and handled loan disbursal, NPA management, DRT cases, etc. Also, she joined Relay Industries in year 2012 in direct taxes, work in the tax advisory, TDS, TCS, payroll planning of RIL and group companies. Also delivered several lectures, workshops on domains-based knowledge and soft skill with CA, CMA, CS fraternity, management institutes and with startup clubs. She is a resource person on financial literacy with IIT Mumbai Incubtis platform. Also visiting faculty with SIS School of Business Studies, Nerul campus and MGM Law College, Nerul. Also a regular contributor to variety journals on tax matters. And she's balanced her passion for finance with her love and badmintons and traveling. I welcome ma'am and I request madam to now kindly start the session, please.
Thank you, Priyanka. Such a
Thank
generous introduction.
thank you, ma'am.
Yeah. So now we are on the seventh day of women empowerment, and it's a Navratri time. I don't know what kind of energy we get during this, even if you are fasting, you are not fasting. And with that kind of energy and the blessing from the goddess, I'm just starting my presentation with you all. A few pointers before I start. As I see, there's around 10 or means more than 10 participants there assembled there for getting the knowledge of income tax overview. Whether my audio and the camera both are visible. Somebody from the audience or the coordinator. Yeah. Shall I go?
Yes, ma'am, please.
Yeah, great. So the topic is the Income Tax Act 2025. Till now,
Ma'am, one second.
hmm,
Ma'am, your screen is not visible presentation.
presentation, I have not presented it. Just give me a sec, I'll share it. I
Yes,
just
ma'am.
want to give you some kind of the background.
Ma'am, okay, okay.
Share content. Okay. The presentation is, I'm just sharing it now. Just see if it's visible at you.
Yes, ma'am. Now visible, ma'am.
Okay. Great. So it is not the Income Tax Act 2025, which we are going to see in a much more detail in years to come. That is from effective date is of April 2026. But Apart from the income tax, over the couple of years, we have seen a plethora of changes in the entire legal fraternity, starting with the Companies Act 2013. Earlier, we have a Companies Act 1956. Then we have a new Companies Act, still new, 2013. Then GST has come into foreplay in 2017. Apart from the topics which as a professional we are encountering on a day-to-day basis, we see there's a lot of changes in the total legal arena. The age-old Indian Penal Code is now in a new form, that is BNI Bharatiya Nyaya Samhita. If you recall, we have seen the movies in the past, and in a scholarly sense also, when I say Section 420 of Indian Penal Code, suddenly it's right something to do with the fraud kind of a person, something to do with some kind of the malafide, some kind of the cheating and the fraud. So section itself has become a synonymous with the character or the kind of the litigation or kind of the charges one is subjected to. But now, as the IPC has been done away, we have a PNI Act, neither the judiciary nor the advocates, everybody is in a process of learning the new sections. Now 420 is not a section related to that. It has gone ahead with some other section. Similar is the case with our income tax act. We have seen we have income tax act 1922. It lived around 50 years. Then 1961 we have got an act which was there with us as a student, now as a professional, all the professional journey we have used this app. Then now all of a sudden we are just going to undo our learning and get accustomed to new sections, new provisions, everything. The people may ask, what is a fundamental change? Why all of a sudden we as a professional have to relearn everything, have to undo our old learning and get embraced to the new things. At least whenever I go for any kind of the deliberation, I don't have to look at the sections because everything was in the mind. This is the sections we were dealing on a day-to-day basis. But now it is a struggle for you. It is a struggle for us. Whether worthwhile or not, uh, as per my personal view, a lot could have been done to achieve and boost economy, to give us, to present us something new. The entire exercise was without any policy reform. The mandate was to do the rationalization, the simplification, just reorganization of things, taking away the things that were not needed, so on and so on. So this is just something as a background to start with what we are going to see. Again, as I said, I want to make this webinar interactive. So feel free to stop me again through the organizer. You can raise queries, you can interrupt me, you can ask the questions so that by the end of this webinar, we have something to take away. You are all with me? Yeah. So why there's a need to change the law? We can have the age-old laws, then we have the service tax, we have become the GST, and there are so many new laws which deals with the IT, the cyber crime, so on and so forth. So As a general rule, change is a continuous process. The legal system, yeah, the legal system must evolve to the changing societal needs. And that is the reason we have so many amendments on a year-to-year basis by way of notification, by way of circulars, press releases, because the law has to be relevant as per the current needs. So, as a result, we have an income tax in 2025 with us. Okay, so first for clear that. So, after 6 decades, the law became unwieldy with hundreds of explanation, provisos, and subsection. So, starting 5, 6 slides, I have just copied down from our income tax side, the finance ministry side, because they have given the rationale why they are taking this massive exercise of restructuring, simplification, and so on and so forth, for which the entire ministry and the department is patting their back. So, what they said, after 6 decades, the law became unbinding with hundreds of explanations, provisions, and subsections. So, from complexity to the simplification. So, why it has become complex in a first sense? Because every year, by February 1st, we have our budgets. Earlier, it used to be 28th of the February. Now, because they want to give it to the by the passing of the money bill till the time it passes to the Lok Sabha, to Raj Sabha, and getting the president accepts. It takes around 20-25 days to 1 month. And by it was passed on 20th of the February, the amendments don't become effective by 1st of the April. And that's the rationale behind which they prepone the date of the budget last day of the February, which may be February 29th or 28th, the first day of the February. So that was the thought process, so that in the first of the April, the taxpayer, the professional, the companies, their IT, every should be ready the new law to begin. Now we have the concept of the assessment year is typically the first April of every year and previous year. The new law 2025, if you have already news chats, this paper clippings, and all those given by the WhatsApp. One thing is very clear, we have got taxi. Now there's no concept of the previous year and the assessment year. Again, the content is saying what was the previous year is now the tax. So, factors contributing to the complexity of the India's IT Act 1961. They say it was amended 65 times with more than 1,000 amendments. How this through taxation laws, amendment bills, and all these were needed to keep in pace with our surroundings, with the changes in law, changes in technology, all those kind of faceless things, which earlier was even unheard. We can't even think of making an assessment without meeting the office. Now, with the system, if you are sitting in Mumbai, your officer, your assessing officer can be a person sitting in the Nagaland or the Guwahati. Still, the process happens seamlessly, and you are not able to see who is the on the other side. So this happens because now we are in era of Swiggy and Zomato, where we just order and the things are delivered at our place. So is the case with the tax department. They have a huge infrastructure, and now everybody is taking care of the infrastructure, do the data mining, integrating with AI, and that's the reason we have so many amendments which is based on those kind of improvement in the IT sector. Then reduce tax base and increase litigation. Obviously, whenever any amendment comes, sometimes or majority comes with a retrospective effect. If there's a law which covers the taxpayer, obviously by the next finance act, they undo that, they try to undo that tax law or Supreme Court judgment, and then they put in some words. All those things always lead to a litigation. So there was a litigation, higher administrative cost, and the compliance burden in the 1961 Act. Obviously, the legal language was very traditional. We have numerous exemptions and deductions. And at that time, the law was enumerated in 1961. We don't have the concept like new tax regime and old tax regime. And the reason was very obvious because at that time, our economy was in a doldrums and the government was giving a lot of incentive by way of tax exemptions, tax deductions. If you buy an insurance policy for yourself, if you do the health insurance for yourself, you will get an IT exemption. That was the process and the mindset in which those exemptions were given. Because in India, as you people are aware, we don't have social security concept where the state will take care of the healthcare, the education. Here, we have to earn, we have to save for our passive retirement life when we are not earning that kind of the salary or the remuneration as we are and at the earlier age, and the cost of the medication and everything is rising, and there be it the housing, be it the education, be it the insurance, the government has given tax incentive by way of tax and all, so that the person keep have some kind of the saving, inculcate the habit of the saving, and they were incentivized by way of the tax deductions and exemptions. They have to pay lower tax deductions. Over the years, when the economy has matured, the so-called Gen Z generation of these days, they say we want a higher tax flow in a per hand, and the government is more than happy of giving and shifting to the new tax regime where your pay packet is increasing, and they have done away with those kind of the tax-based incentives or the savings. So, if you are following a new tax regime, as you are most of you must be aware, the cash inflow on a salary day is on a higher side as compared to the people who are in the old tax regime, unless until they are in some kind of the exemption which is favoring them. Otherwise, for majority of the people, at least this current financial year, the new regime is beneficial because the tax rate slabs is more, 87-year rebate is more, and so on and so forth. So the whole discussion is that the when the laws were made, the emphasis is that to take care of the social economic condition of the people prevailing at that point of time. So what is very relevant today may not be relevant after years to. So whether old was bad, the new is good, is only a time who is going to tell. Okay. Then the other thing was fragmented structure and outdated provision. Obviously, if we have some kind of the section, then we introduce a sense of going forward. This will be applicable. This is applicable only till the year ending March 25, March 24. So many clauses comes like tax holiday. Those clauses come within definite time period, and after that, those provisions are not related. So our 1961 Act was having a lot of more than 70, 80 provisions which were passive provision. They were not. So in a new income tax 2025, those have been done away. Again, a little bit of modification or rationalization. For example, we have tax filing section starting from section 139. This I'm talking about the old act 1961. PAN provision was after that 139A double A. Now in the new act, first we have a PAN provisions followed by all the written filing and the assessment provisions. So this kind of the smooth reading what comes first has been attempted in the new Income Tax Act 2020. So these are some of the issues highlighted by the ministry. Why we are shifting towards the new income tax bill now, which is an act, Income Tax Act 2025. So till now, anybody has any question, any doubt, or shall I go ahead? Even if you put in a chat, that is fine. Okay. Someone has said, my voice is echoing. Is it for everybody or it is just for a localized people? Uh, Pujanka, can you
Yes,
confirm whether,
madam.
yeah, why my
Just
voice is okay?
it's your voice is Rico, ma'am, from 5-10 minutes.
Okay. Just
Or
let
maybe
me.
some network issue. Maybe it is due to network issue.
Okay. Mhm. Shall I turn my camera off for some time just to see whether after that voice is okay?
Yes, ma'am.
Huh? Okay. Then what has happened? How the process has started? The entire journey towards the new text. As you are aware, this 2024 was an election year. Okay. So in an election year, we have two budgets. One is an entry budget and the other is our main budget. Once the party who wins the election, they come up, they present a full-fledged budget. The earlier budget was just the interim kind to take care of the finances, the income and expenditure till the time the election process is over. So in July, when the main budget was presented by our the government has announced its intent to overhaul the Income Tax Act 1961. So what has happened? Again, that time of budget speech, when it was announced we are going towards a new Income Tax Act, and soon the ministry will present a income tax bill with the comprehensive review of the existing act. That was what was point. And the simplification exercise followed three guiding principles. First, structural simplification, improved clarity, no major tax policy changes, and no modification of the tax rates. So these were the three guiding principles on which the Income Tax Act 2025 or Income Tax Bill 2025 has started. This simplification, no policy changes, and no tinkering with the tax rate. And after that, the process began of getting into the new tax 2025. This is a total landscape legislative timeline. So One thing you will all agree with me, with all those kind of pitfalls or shortcomings we may cite for Income Tax Act 2025, but one thing is very clear, this kind of massive thing has happened within just 3 4 months of vigorous work at the time by the tax department, because this exercise was totally internal. The CBDT has come with the internal committee and they were given a task. So many man hours has been worked by them, and then was that we have our Income Tax Act 2025. So as I told earlier, the FMA has announced we are coming up with the income tax bill. Then on February 13, the original income tax bill was introduced in Lok Sabha. By July, from Feb to July, the Parliament Select Committee submitted a report with 285 recommendations. In August, original bill, because it has lot of changes in it, so entire bill was withdrawn and reintroduced as an income tax number 2 bill on August 11. August 12. See the speed with which the things are happening. August 11, it was introduced in a Lok Sabha. The same, then very next day, it was passed by the Raj Sabha. As I told you, all these are money bill. Therefore, first it had to be presented in a Lok Sabha. Then it went up to Raj Sabha, and by August 25, it was a presidential accent, and Gazette notification has happened on August 21, and we have our Income Tax Act 2025, which is applicable from April 1, 2026, tax year. So this is the entire journey of the Income Tax Act from 61 to 2025. And everything has happened with such a lightning speed from the tax department. So we always say we as a professional have high time, but believe me, this government is not allowing even the internal people, the people on the other side of the table, to have a breathable space. So this is the thing. Now, again, this slide is from our finance ministry. They say income tax bill 2025, now income tax act 2025 received in the Assembly, replaces the 6 decades old bill. Simple tax reforms, streamlined, integrated, minimized litigation, $100, practical and transparent. A landmark step towards ease of compliance and ease of doing business. This is their motto, which all TV channels, print media is covering, commending the lot of things about the new Income Tax Act 2025. Okay, so whether the purpose is served, what we have in days, in the years to learn, that we'll see it in detail now. This is just the face what has gone and why we have a new tax. Okay, so simplified structure, digital integration, and taxpayer centric. This is the cover page of Income Tax Act 2025. Now, again, reduce content. They have reduced the number of chapters from 47 to 23. All data statistics. The word count is reduced by almost 50%. Concept of unified tax year. No previous year, assessment year, nothing. Only the word has been recoined. Otherwise, whatever we have learned so far since our curriculum till date, Section 3 of 1961 defines previous, the same concept is the text. No change, except the change or the coining of a new term next year. Logical reorganization. Something this act has done really good in a sense. For example, we have the sections dedicated to section 11, 12, 13, which deals with the trust. Sometimes they are in section 10 and 23A dealing with the education and the universities. Again, we have the accredited tax, exit tax 115 PD. So those sections were appearing in numerous chapters under section 10, under section 115, and section 11, 12, 13. So everything they have grouped together as a NPO. Now those provisions doesn't say belongs to trust or charitable organization. They have kind of a non-profit organization, and all the relevant sections, everything has been clubbed together under one chapter. So that while you are going through it, you don't have to refer numerous sections to understand and apply the law. So again, as I told you about PAN numbers, so they have done the simplification, which is an enabler for some of the section, but for some other sections, we are struggling because the way they have been reworded, they open a Pandora box for the litigations to come. Again, the use of plain language, notwithstanding, in our curriculum, we have not only income tax act, we have numerous आपका labor laws है. At least in our curriculum, we see the Companies Act, we see the labor laws, we see the PF Act, okay, and this negotiable instrument act, so on and so on. Again, there's a beautiful chapter on the interpretation of statutes, how a law has to be read, various maxims, accident judgments, those kind of the legal maxims, the literal rule, the golden rule of the construction of any legal document. So till now we have read those things, we have applied in our office, in our practice, and more or less things are quite settled in our brain. Something like notwithstanding cause, we were very sure how to interpret that. But after so many decades, when the things were quite settled in our mind by way of the judicial precedent, all of a sudden, the ministry thought, no, it's a very archaic kind of legal jargon. We'll remove that. It's a copy paste place of, and they have just that tab, they said replace with, instead of notwithstanding to irrespective. So these kind of the changes have been done. Some of you must be aware about the ready reckoners. Earlier, after the budget, before we get this big thick book of taxman, income tax, finance, finance, so and so, we also get the ready reckoner, which has the TDS and TCS provision at a glance. एक tabular form में we get those kind of the TCS and TCS provision. Same has it in that. Now we don't have a section, more than 50 sections dealing with the TCS, starting from 192, and it goes up to 190 TDS on plus. So I am a regular faculty dealing with the TDS and the TCS with the many professional forum. And I always used to say to my participants, now after T, we'll have something XYZ. And then again double A, double B, and all those sections in our TDS provisions. But the government is smarter than this. They have changed it and made this tabular. No doubt, tabular format, the presentation is easy to at least glance through. But after that, we have a reading the section, the contents below that table. which provides 193 is what, 194 is what was we had earlier. All explanations, not explanations per se, but all contents are given below the table. So on a standalone basis, if you see just table, you will find it very easy. If this section is that, the rate is this much, job is. The moment you deep down the table and see those kind of the remarks or the contents or the things given below the table, you will understand the earlier was not bad. So the reading is same, only the way we are reading till now, we have to reorganize ourselves, unlearn some things, and adapt to the new things. So these are the structural simplification. Then modernization and digital interaction, text-centric approach, faceless administration, as I already told you, reduce patient. That is a wishful thinking by the government. They say because everything is very simple now, they have lot of other earlier section used to start, and after 3 4 lines we get something called a full stop or the comma. Now section it has been broken down. We see the full stop quite often. All the provisos explanation has been done away with, and those things are replaced by the subsection. Okay, so by doing this, they say it is a very friendly reading, and since it is very clear, it will lead to, or it may lead to reduce litigation. How much and how far, we'll see in days to come. Again, taxation of the digital assets. In the old act, we do not have a clear definition of the digital assets, cryptocurrencies, virtual digital assets, non-fungible tokens, and all. Now, in this act, they have defined each and every term so that we have a clear definition which will avoid ambiguity if at all we are going to face it in later place. Data and compliances. Okay, I'll give some more emphasis to a power which is now been with the tax authorities during search and season. The people say it's a draconic power which was not in 1961 Act, at least on the Act itself. The person, the bureaucrats, the officers, the search team, they were doing that with their intent and the actual happening at the during the search time, but these provisions were not on the statute. Now during the search, they have the enhanced power to go into the digital data, something which is on a cloud storage, digital accounts. They have every right, have been given every right to ask for your passwords, and all those rights have been given just by the mention of in the. It doesn't say you have need any kind of approval or third party supervision, but they have been given this right, even if this is inconsistent with the doctrine of the private privacy. If there's a search, the person, search party may ask some information which may not be relevant for the search operations, may not be a business books, but since they have the power to take off anything which is on the cloud, on the digital media, and if this power is not with some kind of the judicial or some kind of the intent with what it was given, it may curtail all the rights of privacy or the fundamental rights to the privacy in the years to come, which may be a subject matter of the huge litigation. Okay. So this is what, this is again from the CBDT website. Total sections reduced, section 100 and 819 to 536. If you see the original Act 1961, only 298 sections, but those sections have a lot of double A, BA, 115, BAB. This 44 AD, ADA, AAD. So all these things, because of the amendments, the new alphabets were being increased. So practically we have 298 sections. But if you see in a letter, then there were more than 800 sections, which have now condensed to 536 sections. This is what the Income Tax Act 2025 claim, and which the proudly the government is announcing in all the digital media. Chapters reduced from 47 to 23. Schedules have included. So आपका front बहुत light हो गया, back is very heavy, because earlier we don't have the concept of the schedule. Now everything, all section 10, which was a section which is forming income not forming part of total income, which was earthwise section 10 in Income Tax Act 1961, those have been taken to the schedule. So we have 16 schedules with us. So your reading will be complete. If you read the section, then the rules, which is going to be announced any point of time, and then the schedules. So we have one more supplementary to read with to understand concept. New tools, we have the tabular presentation formulas. If there is a kind of some kind of addition, section 54, 54F and all that, we have a text formula. Whenever it's a formula or tabular way, they say the reading is much improved. Word count reduced, tax year replaces previous year's assessment year, consolidated tedious thesis tables, easier reference, plain modern language, as I already told. Now, unnecessary reform, but test lies in the implementation and judicial interpretation. That is the sum and substance of entire delegation. The government says it's a reform. No doubt it's a reform, but the true reform should lie in the implementation. How the tax authorities, how the bureaucrats, how the tax criminals, how the machinery is taking it forward. What are the key concerns? We have something which we have seen from the one side of the lens, what the government is claiming, what feed is given to us. Now, something from the taxpayers, from the professionals, from the advocates, from the legal fraternity side. First and foremost, it says potential for a new wave of education. The experts worried by rewriting provision, what have been settled over decades by the courts may open a new legal challenges. Every rewritten clause, even if it is meant for simplification, will need to be reinterpreted by the courts, creating a period of legal uncertainty. So this is the concern by you, by me, and by other fraternity, which is a major concern as what is proclaimed by the government. If this act is going to reduce litigation, but as I said, this thing need to be tested in the courts in the days to come, in the years to come. Again, draconian powers and privacy concerns. The act provides allowing tax officials to access an individual's virtual digital space, including emails, Skype, social media. It has been a major point of contention. While many say it was there even earlier, and it is needed for making it enforceable, but the concern is a lack of sufficient judicial oversight and safeguards, which may lead to the potential misuse and harassment of the taxpayer. Again, the no fundamental policy reform. It is just a major administrative overhaul and not a tax reform. So it is a missed opportunity to address deeper structural right changes. What has been done is to take away the irrelevant and the redundant clauses, just shake and reorganize things, taking provisos and explanations apart, putting it as a section, and then what we have is our new Income Tax Act 2020. Again, coupled with the administrative and the implementation challenge, lot more to be seen. Again, concerns, new way of navigation, implementation challenges, and the privacy concerns. This is our motto. As a professional, this slide, though it has just two lines on it, but it keeps us setting. There's no place for the contentment. Every time we have to test ourselves, retest ourselves, learning, unlearning, and then relearning on a continuous basis. May it's a Companies Act, it's a GST, it's an Income Tax Act, the Cyber Security Act. We have sections called Foreign Assets, Undisclosed Assets and Income Act 2015. So the learning and the reading is never ending, and so is Income Tax Act 2025. So this is what is the narrative of the Income Tax Act. There is substantive change, but change in the narrative. No policy reform. Now, I'll come to a little deep dive in the Income Tax Act 2025. Till now, it's just an overview, what we are going to focus, how it is coming up, why the entire exercise, the pros, cons, and so on and so forth. But now we have to read. I can't say it's a same wine in a new bottle because Navratri hai. So same food in a new platter, something like that. You can always find those kind of the terms. But now we have to sit and read. I'll just give you what sections in the Income Tax 2025 Act. The very section that is true for any, we have something like short title, extent, and commencement. These are the very starting introductory part of any statute or the any. So obviously, The short title is Income Tax Act 2025. It extends to whole of India because now we don't have a separate status for Jammu and Kashmir. And the date of announcement is 1/2026 tax year, not the assessment year, not the previous year. This is section 1 of Income Tax Act 2025. Now, section 2. Section 2, in most of the statute, it deals with the definition. All the definitions which we are going in the various sections and the various chapters of Income Tax Act 2025 are given in section 2. If you remember, the earlier Income Tax Act 1961, the first definition was agriculture income to 1. Now, this 2-1 has been shifted to 2-5. We have something different in 1 to 4. First definition is an accounting definition, 2-1. So, your Income Tax Act 25, the first definition is an accountant definition. Earlier was in the explanation under section 288. Agriculture has been shifted from 2-1 to 2-5. Only the arrangement, the content wise, no change. In 61 Act, we have just 48 clauses of definition. 2025 May, we have sub 2 and 102, 12 clauses. So from 48 to 112 definitions we have to read. Again, they are not definitions. Earlier, whatever we have as a 40A, 40AB, all those A, B, C, D, they have been given a new definition, new clauses. And their contents are the same, clauses change. So we have to undo the way we are thinking. For example, when it was agriculture, back of the mind we are saying 2-1. Now we have to realign as 2-5. Capital asset was earlier defined in 2 clause 40. Now it is 2 clause 22. And 2 clause 22 earlier was dealing with the dividend. Now it has shifted to 2 clause 40. Charitable purpose, 2 subsection 14. Now it is subsection 33. So all those things which were become very handy when we are deliberating it, when we are telling it to the clients, just to show our we have learned it over the period. Now again, we have to just take a printout of old section and new section, just stick it somewhere in your wall or on the table, and keep reading 1-2 sections a day, so that by the time the act comes into the thing, you again get accustomed to referring to the new clauses in new sections. This is what I have done for myself. Now, this is about section 2. Section 1 was the short title and commencement. Section 2 was definition. Section 3, same as previous year. Only instead of previous year, they say the tax year. Otherwise, the content and everything is the same. The previous year also is a period of 12 months, April to 31st March. If it's a new business or the profession which has been set up, it starts from that period. The same is the same holds for the tax year also. And the year follows tax year is a new tax year. How simple you are finding it, that is anybody's guess. Because till now, at least even if it was a confused term, it was quite settled. Now the government is saying no, there was a lot of mistakes which were happening. when we are counting the previous year and the tax year, and previous year and the assessment year, and now you have a unified tax year, so everything will be streamlined. I'm not sure. I'm not sure. Even if by paying the advance tax, you have to fill in at least the year, tax year, the subsequent tax year, then tax year, and then subsequent tax year. Section 4, charging section, no change. Section 5, scope of total income, no change. Verbatim is the same in 61 and it is the same in 20. Then comes section 6. Anybody, what was section 6 referring to? 1961. हमने section 2 में क्या पढ़ा था? If anybody can write on the chat box, section 6 of 1961 Act. Yes, section 6. I think my problem is the sound which is not very clear to people. Great. So section 6 was residential status. Earlier, it was from 6.1 to 6.5. Initially, it was for the resident, individual, HUF, farm, companies. That was the main. In between, they have brought in a concept of deemed resident 6.1. Okay. Believe it or not, every time we are fighting, doing the tax filing for the non-resident, this is one section, at least which used to trouble me. First and foremost, 182 days. Basic conditions, 182 days if in India, the resident. Then 60 days and cumulative days. We have 365 days in the 4 years preceding previous year. Okay. This act has really simplified it. I'll just give you a wording. What we have in 1961. Just see the 6.1 says individual is to be resident in India in any previous year. If he is in India, in that year, for a period of years amounting in all to 182 days or more. Another condition, having 4 years preceding that year, been in it for a period of periods amounting in all to 365 days or more in India, for a period of periods amounting in all to 60 or more days in that. This is what section 6.1 A and B was, which is nothing but the basic condition when we some other country or the books from other solvers. Now I have Income Tax Act 25 also with me. What it says? It says for the purpose of this act, residential status in India in a tax year for a person shall be determined as a first, an individual shall be resident in India. An individual shall be resident in India. It has not said an individual is said to be resident in India in any previous year. It simply says an individual shall be resident in India in a tax year if he is in India for a total period of 182 days or more in that tax year. Stop. Whereas he is in that for a period starting in our to
Madam,
182 days.
madam, your presentation is not visible.
Uh, Pujanka, now I am not doing any kind of the presentation.
Yes. Okay, okay.
Presentation
Then
I have
okay.
just limited to a background, and now
Okay, no.
now I have overlaid and
Okay,
the
okay.
yeah.
Okay. Yes, yes.
So it is, I'm just reading it from the books just to make the participants aware in some of the sections, the wordings they have improved, they had made it very simple. Otherwise, section 6 per se, what challenge to understand in a direct. Okay. Then we have the explanation area. If a citizen of India who leaves India in any previous year as a member of a crew of an Indian or for the purpose of employment goes out of India, the provision of subclause C shall apply in relation to that year for the word 60 days occurring there. The word 182 days has been substituted. So, under section 6.1, in the otherwise section, we have clause A and C. Clause A, it says if you are in India for more than 182 days, you become a resident. But in other cases, if you've been in India for 60 days in the previous year and more than 365 in the 4 years previous year, then you become a resident. By way of proviso, it said for the persons or the individuals who are working as a crew of an outbound ship or the persons who are going for an employment outside India, instead of 60 days, this has to be substituted. Now, the new act is in those scenarios, the provision of subsection 2 shall not apply. So, it doesn't say you have to substitute 60 days to 180 days. It simply says if you are a member of outbound crew member of a foreign vessel or you are going for the employment outside India, the clause B, the clause C will not apply. You have to just look clause A. So this is the kind of improvement they have done in the residential status, which is quite good. Otherwise, reading clause 6 and believe me, we as a professional may be using on a little lesser side, but in the exam, all these students, आपका foundation होने दीजिए, intermediate, final level, they are tested on these things like an okay. For us, at least for me, passed the exam long back. 99 June or May 99 session, I have cleared my exams. So it is more little, but even now I see my artists and the people who are doing training with us, they are having problem with the residential status. Show short questions, papers. So now 2020, it has given justice to this at least. Again, so unless until you people have both the books, both the apps with you, and you are comparing the old versus new, then only you can see if any kind of betterment or the simplification you are finding it. So when you are reading the new act, you may realize the earlier was better or the new one was better. The persons or the students or the persons who are going pre 2025 act They don't have kind of the. Okay. Now, section 6, as I said, it deals with the residential status. Not much change in the individual's HUF companies. Only thing, the presentation and the language have very simple. All cumulative 4 days and all those things have been removed, and the simple presentation of the HCS and the residential status. After 6, we have major section 9, income need to approve or India. Here, section also has a lot of explanations and the provisos. In the new, all provisos and the explanations have been given a subsection, and section 9 is a content wise, it is the same. However, while you are reading it, it is a bit easier the deciphering what is there or what interpreting what is there. The flow of the language, flow or the act is becomes section 10. I am just taking the major sections, not otherwise my topic saying overview will not help, and the institute I'm sure in the days and months to come will definitely go for individual chapter wise or the scope of income and all those dedicated sessions covering the provisions in detail. Today's deliberation is just to make you aware what is we are going to unfold. Hope it is clear to you people. Any questions so far? And I'm really sorry for the technical glitch, which maybe I'm not sure, but that is I always say it's the challenge of a webinar. In the physical sessions and all, at least you can see the faces, whether it is gulping in or not. Those things are very handy. And now I'm dependent on the chat to understand whether it is making sense or I'm going too far, too slow, the relevance and all. Any one of you, please? Just a minute. Pujanka, can you
Yes, ma'am.
give at least when they raise the hands also, so that I can have the real feedback of the participant, if it can be is possible.
Ma'am, all settings. One second.
Because numbers are very much in control. So I was thinking to have this more interactive.
Yes, ma'am. Ma'am, there is one question in chat box
Okay.
from Ishwar Pujare sir.
Okay. Okay. So Pujari sir, what has come in the public domain is just income tax act 2025 by taxman. They no other publication has come so far, and I'll tell you the reason also. The main reason is that we are going to have our annual budget, and believe it or not, they are saying that they have removed all the A's and the provisos and explanations, but certainly there will be amendment in the act which is going to come through the budget. And that is why we are not getting too many publications for it. It is just the taxman which has released Income Tax Act 2024. Just give me. No. Shall I go? So we were on section 10. Earlier, the section 10 was talking about the exempt income. It started with agriculture income, income from nature, all those gratuity provisions, VRS deductions, HRAs, all those things they have clubbed in section 10. Income which do not form part of total income, section 10. Now in New Act 2025, section 10 governs the laws relating to the party use. It doesn't deal with the exempt. Earlier, which was there in section 5A, has been brought into the Portuguese law, which is very limited application to the residents in Goa, Daman. There, the method of computation is very different because they believe on the community of the persons, and therefore they have a dedicated section. Earlier it was 5A, now they have made a section 10. Content is the same, just the reorganization which has been. And our section 11 is what the old section 10. Section 11 has income which do not part of a income. Okay. So earlier we have so many subsections. If any of us are dealing with a charitable institution, section 1023, schools, colleges, hospitals, that sections have so many explanations and provisos. We simply have to turn 3, 4 pages and then 1023 is taken care of. So that was because there's a lot of amendments which has happened in the charitable trusts, in the education institutions, starting from the exemptions and therefore all those complications and the law has become complex over time. Now section 11 just have 4 subsections because बाकी सब शेड्यूल में चला schedule 3, 4, 5, 6. It simply says income which does not form part of a total income, provided the conditions mentioned or the provisions enumerated in schedule 2, 3, 4, 5, 6 are met. मेरा section 11 खत्म हो. But somebody who really wants to see what, they have to go and read the schedule. So my friend is very light. I can boast of I have a smaller income tax act, but we have reread the schedules. Obviously, the person who are not concerned with the exempt income, they will not unnecessarily read the schedule. But for rest of the persons, the reading is complete unless we refer the relevant schedule to understand income that do not form part of a total income. So from one place, it has been removed and brought in from behind as by way of schedule. How good or bad? Unless until you read it yourself, you cannot have a borrowed opinion. I maybe my school of thought, I always think if I am reading one book and everything in that book maybe at various scattered places, I'm okay with that. Because that is why I have used from last 6 years. But now I have 3 books. आपको इधर देखना उधर देखना है. Only thing छोटा हो गया. ठीक है. 50% section of word. The section used. Okay. Provisos not there. No explanations. This is what the preface of income tax act 85 is. Yeah? Just give me a once. Let me connection. Very apprehensive. I should not use on this thing. Yeah. So what is the time I am having? Still I have it. So I have up to section 11, then 12, 13 and no, earlier section 11 to 13 was dealing with the charitable organization. Now all those sections they have shifted to section 332 to 354. So under the heading non-profit organization. So section 11, 12 and 13 which deals with the charitable institution, the definition of which was given in 215, they have been taken out, and all the relevant sections which were earlier scattered at different places have been grouped, and that section 332 to 354, another good enabler. All the relevant provisions we can read through at one section. The again section 12 has now become political party and the electoral board. No change. The same thing. Section 13 heads of income. Earlier, when this was under consideration and we were going through the bill and all, we were saying maybe they may change some heads of the income, at least income from other sources, they may recoin or rename as residual income. But as there was no policy change, which was a thumb rule for the people who are drafting this, therefore, no change in the heads of income. We have a salary, house property, PGBT, profit and gains of business profession, capital gains, and others. Only the section numbers have changed. Section 15 of new act is a salary section. 15 to 18 is earlier. Again, salary was under section 15, but now the coverage has increased for the salary. It is starting from section 15 to 19. Concept same. Section 15 is a charging section. No change. Meaning of salary. Salary will be taxable on a due or receipt basis, as we have knowing it historically. Advance salary, and then arrears of salary. We have section 17 as a perquisite and section 18 as a profit and salary. Everything remains. The only big change in the salary is section 16 of earlier act, standard deductions under salary. We till now we have known just three deductions, standard deduction, which was 50,000 or 75. Okay, 75,000 tax regime and 50,000 for the individuals who have opted for tax regime. Because new tax regime is a default regime, therefore opt for old tax regime and take 50,000 as the standard deduction. It is still continued in the how professional tax PT 2,500. It is still continuing. there was another deduction with the name entertainment allowance, which as an academic person I have read during my college schooling and the professional exams. But in my now more than 27 years of practical professional life, I have never used that section. That has been done. So, under section 19 of the section, we do not have a concept of entertainment, which was otherwise applicable only to the government employees. But even those people, they were not having those that in their slips. Now, what is the change? The first is they have taken out the entertainment allowance, and then what we were having under section 10. Somebody wants to say? I know it's too much of the echo, even I'm having a problem. Shall I go on? Yeah. So, entertainment allowance is not there in the new act. What is now there? We have the provisions related to the deductions related to the gratuity, leave in cash, commutation of pension, VRS deduction, 5 lakh wala. Everything has been brought under deduction. It is no more part of section 10 of erstwhile income not forming part of total income. So, as it is, those calculation, gratuity calculations, those VRS calculations, those commuted pension calculation, leave encashment calculation, everything has been lifted from there and put it under salary under deduction section 19. Again, in a tabular form. You have to read the table. This is what is applicable to you. And then you read the fine prints down the line. The provisions remain the same. But while doing salary, you don't have to go to the exemption income. Now it is becoming part of your salary schedule. Again, a welcome. Till now it is clear. So salary, they have done the same of shifting all those related retiral benefits and its calculation from section 10 exempt income to the salary section under section 19, which is a deduction. So now my deductions have increased. Everything I have to first show as a salary and then show as a deduction. For example, if you got a gratuity at the time of your retirement and when you are doing any kind of the separation from the employment, you first have to offer the gratuity on the upper side and then claim as a deduction under section 19. So it is a two-way presentation of your salary income, which earlier just by way of section 10. Exemptions में हम section 10 में एक सिंपल कैलकुलेशन करके वहां पे डालते हैं. ठीक है? तो this is what the change they have attempted in the salary section. Now, after salary, we have a house property. Income from house property, again, earlier 2 to 27, now it is 20 to 20. सेक्शन 20 से शुरू होता है and 25 पे खत्म हो जाता है. The content, provision, everything is same. You can have self-occupied property, interest also, standard deduction of 30% in case of the rental property, municipal value, municipal taxes, deduction is allowed if you are actually paying. not on the efficiency. So all those concepts remain, no change other than the rearrangement of the section in income from household. So we have come to section 25 of new act. We have started with section 1, which is short title and extent and the commencement, definition, tax year, basis of charge, charging section, residential status, deeming income, then section 10, 11, 12, 13, 15, and now 25. So we have covered two sections and the basics and the background about Income Tax Act 2025. Till now, any questions, you can put it on the chat so that I can see and reply. Or I understand this topic is quite new. Maybe it's the first or the second hearing other than what you people have read in the newspaper, the business news and all those. So still it will take some seepage to come into terms and unlearn what we have learned so far or what we have known so far. Income tax is our bread and butter. Even if you are a person who are dedicated to the audit, but when it comes to our own filing, it is relevant. Okay. Then we come to the next section, PGB, section 22, 266. Earlier it was 28 to 44 BBD. Earlier it was section 28 to 44 BBD. Now it is from 22 to 66. All those sections with A, 44A, 44B, ABA, ADA, ADD, those have been given different sections. So in the new act, unless until we again have those kind of the amendments, at least till now, we don't have any sections with A. But it is bound to come because all the sections have been already placed in. So in case of any amendment, we don't have an option then to put something in between. And how does it will happen? Simply it will start with A series. So maybe another 20 years, 30 years, we may see this kind of the act replaced by another new act. So the fundamental question was when there was no policy change. So was there a need to bring about a new act? Whether the government has lost the opportunity to bring about the major policy changes because just taking away the redundant section, the sections which were no longer in existence, all it HSC and all those kind of sections, duty drop, entitlement, cash incentive scheme, investment allowance, those sections are otherwise irrelevant. It simply we have sections and we are boasting. It is a memento which calling is to celebration from every nook and cranny. No doubt, increase work for us, good or bad. Okay. So business profession, now it is the section 26 to 66. Cash compensatory duty drawback, export incentives, all those sections have been removed. Earlier rent and repairs of building, and plant and machinery, two sections. Now it has been merged. Section 32. How many of you still remember section 32? Depreciation. Block of assets. We have the different rates in the Companies Act and the under section 32. Income Tax Act. Now that section is, it is not 32 anymore. It, now it is 33. एक सेक्शन शिफ्ट हो गया 32 से 33 हो गया है which takes care of the depreciation. 37 was a general deduction. 36 also has one major changes. Section 37, which was dealing with the deduction, which is not a personal nature, which is not a capital nature, which is not in a nature of offense, which has been incurred for the purpose of business and profession. Those are provisions which come in section 37. Now it has become section 34. Same content wise, no change, only the organization. Earlier 37 to 34. Why 34? In between, 20 sections have been merged. 31, 32 have been merged. Presumptive income, AD, ADA, AE, AAB, all these have been made under one section and put up as a tabular form. Single table, which takes care of all those 4-5 sections of the presumptive nature. Again, so the table, you have a lot of reading, which takes care of the provisions. Because Act has the spirit of the law has not changed. Whatever was 44 AD earlier, now also it is 44. The provisions are the same. Now it is single section 54, which is in a tabular form, which combines so many sections. And after the table, you have all those readings. Believe it or not, section 44 AD, AD vis-a-vis 54 AB is still of the sections which call more than 2 hours of deliberation. Genuine deliberation to understand and appreciate the concept. Now, everything in one section 54 in the tabular. When it is a table, they say it's easy to comprehend and easy to understand. Yeah. After that, capital gains, only the section. Earlier 45 से 55 तक का coverage होता था. Now 67 to 91. And then other sources 90 to 95. No change. Just the provisos and the explanations they have made into a full-fledged section, and the original arrangement of the sections has shifted. And so when we are reading the law, we should be aware, if I'm talking about income from other sources, what are the sections I have to. It is not 56 anymore. It starts with section 9. Okay. So it will not happen over the night. It is a continuous reading. Then only these new sections and the arrangement will get. Whether worthwhile or not is anybody's. Okay. After that, we have the provisions of earlier clubbing, set of carry forward losses, deductions, chapter 6, and then the provisions which relates to double taxation avoidance agreement, DTAA, non-resident taxations, transfer pricing. So you people already have a section, if I'm not wrong, 2-3 days back on the transfer pricing. Okay. So so whosoever has attended this lecture, they have understood the concept of the transfer pricing as is stood in 1961. Believe me, transfer pricing is the one of the provision where it has done the policy change in Income Tax Act 2025. Though the revenue is claiming they have not done the policy change. It is just the repricing reorganization with the view to bring the clarity. But in the transfer pricing provision, they have done this. At least they have tried to bring about the discrepancy which was there in the earlier law, and they have made a provision in a way that we reduce litigation to that extent. That sincere attempt has been attempted in the transfer pricing provision. 92A proviso subsection 1 and 2 of the Erstwhile Act which I'm talking to. So anybody who is dealing with the taxation, transfer pricing provision, take note of those changes in the new income 2025. So in some places, they have made changes. In most of the time, it is in those places which is towards the revenue, which is favoring revenue, but at times it is for the benefit of reducing litigation to make the things more clear and put in the statute in a way so that litigation, it cannot be reduced, it can be at least minimized. So TP provisions are one section. Then we have the admission for the assessment. As I said, PAN has been placed before that. We have the assessment, this faceless assessment, same thing. Only till now, we have only income tax 2025 with us. And before 1st of April, when this machinery is become operative, they will be fixing the rules, because many of the things, it is just one liner and we refer to the rules. So all our income tax forms, form 3CA, 3CB, 3CA, CB, all those forms, you'll also see a new number. All those three alphabets combined with the numerics, you may not get it. All provision of the rules, 10A, 10DB, 10AA, triple A, all those things will go away, and we'll have a new set of the rules per se. So we have an act, new act, the new rules, a schedule book to start our journey from April 2025. So Janta, how much time I have? See, I asked a question in between to know the other side of the table. You see. So you people can still see my presentation. This one more slide. This slide is very close to my heart. And this being Navratri, period, the Shakti. Even our title series is the Shakti. So this slide is very close to my heart. ऊपर मैडम बैठी है, नीचे मैडम, they are running through it. Okay. So for other professionals, whenever we see the February, it is a Rose Day, Hug Day, and the Valentine Day. But for us, it is a budget. Very good, normal way of budget month, wherein they come, they deliver budget lecture. वो 1 घंटे 1.5 घंटे का एक lecture बना के budget speech होती है, and after that we are burdened with this much big of fat publication, which we have to read it throughout the year to understand. And again, February comes and it unsettles everything. So as a professional, it is a continuous learning, unlearn, relearn, and learn. And this is a fine tuning of a budget speech. देखने में बहुत सिंपल लगता है. Like the moment the speech is end, my clients start calling, madam, कुछ बताइए क्या हुआ है. And then I say, sir, अभी तो आया है letter. Go through it, through the fine print, then only I can speak about it. And then they keep sending me the presentation for the Deloitte KPMG. नहीं आप पढ़ के बताइए. So that is the plight of the professionals, and learning is never compromised. So this is all from my side. I will be more happy to take questions from you people, and I'm really sorry about the technical glitches, which may be at my end, not sure. Okay. If anybody wants to have any kind of the question related to the new app, old app, domestic transfer pricing, please feel free. Otherwise, I take much of it's a Navratri time, and being Sunday, it's a Garba time also. Okay. Jayesh has asked, any change in Rule 11 UK? So Jayesh, there will be changes in the rule because corresponding sections, at least the numbering has changed. 56, 7A, angel tax, 56, 210 is there. Okay. But the rules have not been notified. So we still have to wait 1-2 months till the time the rules get notified. Only then we see what is there in the new. Yeah. Thanks. Anybody else?
Madam, what is difference between major difference between 216 SS and ST? 216 ST.
Sir, there is no difference per se. Major difference नहीं है. मतलब okay, let me correct it. You are talking about the law as it contained in 1961 Act. You are not asking for the comparison in old and the new, correct? Yeah. So if I understood your question correctly, 269 SS and 269T. 269T is a section which talks about the cash component if it exceeds 2 lakh of rupees. Whereas section 269 SS में हमारा जो पेमेंट ऑफ लोन होता है in excess of rupees 20,000 in cash captures those cases. So when 269 came into game, when we are going and whenever we are buying anything, we pay all the consideration in cash, which is more than 2 lakh of rupees, it is disallowed in the hands of the receiver. And therefore, when this was introduced, there's a lot of policy changes or the IT changes happened at the end of the seller, maybe a trader, the gold merchant or so that the entire transaction does not start and conclude in one invoice, because it says in the if the transaction which is starting and concluding in one go and the amount is more than 2 lakhs, it is disallowed at the hands of the recipient, if I remember correctly. बोलिए. So Priyanka, shall we take a leave?
Yes, ma'am. Yes, ma'am.
Huh?
1 second. If any other questions?
And in case they have a question, they can always get back to me through you. I will be
Yes.
more than happy to connect on that.
Yes, ma'am.
And
Yes, ma'am.
thank you
Sure.
all for such a patience learning.
Ma'am, there is one
Okay, there's one
question.
question. Okay.
Yes,
Let
yes.
me see. Let me
Please.
see. There is
Yes.
one question. I can see it. Just let me go through the chat. And somebody can read out the question to me.
Ma'am, 1 second. For section 54 EC, 6 months will apply from advance receipt or token money or from registration date if substantial amount is received as advance question mark.
See, section 54 EC, which asks us to invest in a notified bonds if we want to save on the income tax, on the capital gains. Okay, that is the split of section 54 EC. Unlike section 54, which asks us to park the money in a capital gain account, that can be done from the close of the year before the filing of the return. That is as per the due date of section 139 of the authorized section 1961. So anytime if you are make just if for example take a the due date is 31st July, and if I am parking that amount on 30th July and putting those details in my tax filing, my job is done. But when it comes to the 54 EC investment, from the date of sale within 6 months, it has to be invested. For example, if you have done the sale in the very first of the April, May, June, then even year is not crossed and you have to park that amount in 54 EC. The, the section talks about from the date of sale. Now, the date of sale, it takes the definition from the Transfer of Property Act. And for the sake of simplicity and the clarity, when we have agreement to sell, in case of a sale deed, when the substantial amount has been given as an advance and the possession is taken over, that is the time we say the sale has been completed. So from that day till 6 months, you have to invest in 54 EC bond. The lock-in period was earlier 3 years, now it is 5 years. And the amount of the interest which you get doesn't even offset your inflation. So now the section itself has lost its relevance. पहले 3 साल था, still the people were investing in 54 EC. अभी वो बोलते हैं कि will pay off the taxes, use the proceeds, and do some meaningful investment elsewhere instead of parking land with just a rate of interest which is very normal. This is the sum and substance of 54EC. सो आपका एडवांस टैक्स एडवांस किया है आपने, पोजीशन ले लिया है, सेल डीड बाद में भी होगा, तो बिकॉज इट इज कमिंग फ्रॉम द टीपीए, ट्रांसफर ऑफ प्रॉपर्टी एक्ट से आता है. ओके, होप I could make the sense out of it. I'm really thankful for the organizers for giving me this opportunity. Look forward
Thank-
to have a physical session on this.
Yes, ma'am. Yes, ma'am. Sure.
Okay, so
I will
that
convey your
I may
message
be,
to our
I may be
chairman,
doing
sir.
justice to it, and we should not be bothered with this kind of the, at least the technology side of the presentation. Yeah.
Yes, yes, ma'am. I convey your message to our PD committee chairman, Arinam sir, and our chairman, Mihir sir. And we will definitely one session at WSC.
Yeah.
Okay.
Thank you.
Thank you.
Admin team. Thank you, participants. Happy Navratri. And God
One
bless
second.
all. Yeah.
On behalf of the Professional Development Committee of the Western India Regional Council and the Women's Task Force, I extend a heartfelt gratitude to Ritu ma'am for the wonderful session and all the participants. Thanks for attending these sessions. Happy Navratri to all. Now we will officially conclude this session, ma'am. Thank you very much.
Thank you. Thank you.
Thank you.